I am the president of Passport Software. For over 30 years, Passport has been providing high-quality business and accounting software to thousands of businesses all over the country. But we've had a lot of help along the way. So today, I would like to first welcome and acknowledge our Passport partners, who are the wonderful accountants and consultants in the Passport community working to help companies with their accounting and technology needs. These men and women are the eyes and ears working directly with thousands of companies using PBS, and we depend on them to identify what you need our software to do. And in this case, that we needed to provide an Affordable Care Act solution. I thank them for all their valuable direction and input, as well as the trust they place in us to create high-quality business software. I would also like to welcome all those who use our PBS payroll and also our time clock software that also integrates with PBS payroll. Without you, none of us would be here, and we appreciate the trust you place in us to deliver reliable and high-quality software. So thank you all for taking time to attend this presentation. I will mention that this presentation is being recorded and that it will be made available on our website probably within a few days, so you will be able to access and review it if you wish. Okay, this morning we introduce Passport's new Affordable Care Act management software, which is designed to help you both manage your workforce and meet your business objectives, as well as complying with the requirements of the Affordable Care Act. This new package is fully integrated with our payroll system and will begin shipping in early December so that you will have time to get ready for the filing season. Over the past year, I've discussed the Affordable Care Act with hundreds of people, and I have learned that there is a very common misconception that the ACA is kind of like the W-2s, another year-end process you are required to go through, producing more forms for the IRS. And the ACA does require filing new forms, and the filing season is the same as the W-2 season, with deadlines that start at the end of January. But the ACA is much, much more, and good ACA administration requires you to, on a monthly basis, recognize which employees are now classified under the ACA rules as full-time employees, to offer full-time employees an affordable insurance plan, and to record the offers that you make to them. So Passport has created 3 versions of this new software product to help you administer the ACA. The 3 versions are based upon company size and corporate structure. And with them, we can help companies from 50 employees to thousands of employees in a single company or in many different companies. As just a side note, the Affordable Care Act will present most challenges to businesses with a lot of part-time employees and to companies with a lot of turnover. Today, we are going to show you the basic functions of this software product we are releasing. These functions will apply to all sizes of companies and will cover most of the work that you need to do to manage and to comply. And for today's session, we really want to give you an overview understanding of the tools that we've developed for you. We will not dive too deeply into the details of the ACA, the software, or the strategies that you may want to consider for complying with the Affordable Care Act. More advanced topics will come in the future through new training sessions and published materials. Today, we want to introduce you to the software and the ACA as we understand it and have programmed for it. Of necessity, we will be talking about the ACA and the IRS instructions for filing in addition to presenting our software. However, we are not lawyers or CPAs, and we do not render legal or accounting advice. we encourage you to consult with your own professional advisors regarding how the ACA applies to your company. And with that disclaimer out of the way, I will now turn the session over to Adam Miller, who will be assisted by Paul Solberg. To answer a question that may have just popped into your mind, yes, Adam and I are related. Adam is my nephew, and he's been hard at work on this new product for many, many months. Paul Solberg is our Director of Quality Assurance and Documentation, a very, very important job here at Passport. So without further delay, here's Adam.
Well, thanks to all the attendees. And as John mentioned, we want to talk to you about the Affordable Care Act and how the PBS ACA management software can give you the reporting and management tools you need. However, we are not lawyers or CPAs, as John mentioned, so again, we encourage any business to consult with those professionals about their own specific requirements. Now, during the presentation, you can submit your questions by chat to Robin, and we'll try to answer as many of them as possible at the end, and any we don't get to, we will respond to privately. Okay, so Paul, let's start with some ACA terminology.
All right.
Now, when we talk about affordability, all we're really saying is that the employee's share of self-only coverage is less than a certain percentage of their income. So for 2015, that's 9.5%. Full-time is anyone working at least 30 hours a week or 130 hours a month. A full-time equivalent, or FTE, is used only for the purposes of deciding who needs to comply with the ACA. So when you have a collection of part-time employees, the government says that for every 120 hours they work, that will count as one full-time employee, which leads us to the next term, an applicable large employer, or ALE. Now, if you have 50 or more full-time and full-time equivalents, you are defined as an ALE and are subject to the requirements of the Affordable Care Act. An aggregated ALE group member is one company among many, all of which share common ownership. So this company may have 10 employees, but as a group, there could be hundreds or even thousands, and collectively they're treated as one company with thousands of employees when it comes to the ACA. All right, safe harbors. These are IRS acceptable methods of determining an employee's income, and there are 3 of them. Now, when you're choosing one, bigger is better. The more money an employee makes, on paper at least, the more money they can afford for insurance. The most straightforward and what should be the most common method will be the employee's W-2 wages. The second safe harbor is the rate of pay, and you calculate that by taking their hourly rate, multiplying it by 130 hours a month, no matter how many hours they work, and then multiplying that by 12 months a year. And then the final method is the federal poverty level, or FPL, which is currently $11,770 a year, but this is likely to be adjusted each year. Now, this is your floor. The only time you would ever use this is if you have employees making less than $7.55 an hour. So now that we have some of the terminology to work with, let's take a look at the IRS forms you'll need to file as an ALE. And though there are huge differences, you can kind of equate these to the W-2 and W-3 tax forms. So Paul, he's already got the 1095-C up. So this form goes to both the employee and the IRS. Part 1 has basic employee and employer information. The boxes in Part 2 detail offers of coverage, the lowest cost of qualifying coverage, and an explanation of the type of coverage or a reason for no plan at all. Part 3 is only for self-insured companies, which we don't have to talk about today. All right, Paul, if you could bring up the 1094-C, please. Okay. Now, this is the employer transmittal summary. Part 1 is company information. Part 2 lists the number of 1095-Cs you've attached, whether the company is part of a common ownership group, and an area to claim transition relief. Part 3 summarizes coverage and employee information. And if you are part of a common ownership group, Part 4 is where you will list those other companies. Now, there's a couple of things that many people are missing when it comes to the ACA. A lot of people Google Obamacare and read about these forms and what they need to submit, or they hear about transition relief that says they don't have to pay penalties for 2015, and they don't pick up on the management aspect of things that they'll need to do during the year. So if you just wait till January, fill out your forms, and then discover that you have some employees that became full-time and you weren't aware of it, it's already too late. Then there's also the matter of reporting. First, if you are eligible for transition relief, you have to claim it on the 1094-C. The IRS doesn't just say, oh, they only have 80 employees, we won't worry about them. And secondly, though the shared responsibility penalties are getting phased in this year, the reporting penalties are in effect. So the IRS will be understanding of good faith efforts to be timely and accurate, but if you simply don't file at all, you can be fined up to $500 per form. So in the case of the 1095-C, that has one copy for the employee and one to the government, that can be $1,000 per employee right there. All right, and now let's go to a PBS demo. Paul, if you could run the monthly labor summary report, please. Okay, as part of the year-end update to payroll, which is in final testing right now, we have a new report called the monthly labor summary. And though this is outside of our ACA management software and doesn't have all the bells and whistles to account for exempt employees and such, it will tell you how many hours employees are working each month, as Paul is showing you. And it'll give you an excellent idea of whether you are an applicable large employer. At the bottom of this report, we have this row that is labeled Estimate of Full-Time and Equivalents. Now, if these average 50 or more, you are likely to be an ALE. One thing you may be wondering is how the software handles weekly or biweekly pay periods to give you monthly hours. And in these cases, the ACA lets you portion the hours by how much of the pay period falls in each month. Okay, if you determine that you are an ALE, you can start preparing for our ACA solution already. The first step is to do some internal house cleaning, which you can do right now in the employee's record. Paul will bring that up. And there are a couple fields which must be entered for the ACA. The first is the Social Security number on the right-hand side. And there's the hire date in the lower left. And if the person is no longer employed, you'll need to enter a termination date. All right, moving on to control information. Once you purchase the software, you'll be able to see and alter ACA settings. So these are things that can change from year to year, depending on changes to the law itself, inflation, or other factors. And this is where you'll go to enter offer of coverage language down at the bottom, or claim your transition relief for the 1094-C. You may notice this other tab next to it for designated government entities. This will not apply to most of you, so we won't talk about it today. All right. Our next step is to talk about ACA groups. Okay, groups allow employers to tailor their income calculation based on those safe harbors and their measurement period methods to their greatest advantage. So you can balance administration requirements versus complete optimization. What the IRS doesn't want is gaming the system. You cannot cherry pick different rules for individual employees. They want consistency. So we will have future webinars where we get into more detail and show you how to get the most out of these settings and from our ACA management software. And now we can create AC records for the employees. So the Generate Employees ACA info is used to expedite the creation of many records at once. You'll obviously have to go into some, if not most of these, to make adjustments, but this does most of the work for you and can save hours. The Enter Employees ACA info screen is the foundation of all the analytical reports you're about to see and will be used to enter records one at a time or update any record as things change. Now we're going to create a new record, and even one at a time you'll be able to see that this isn't going to take very long. And as Paul pulls up, so when we choose an employee, you can see it brings up the basic information. Now, insurance eligible means they're currently classified as full-time. Paul's just checked that. Insurance offered is pretty obvious, but if you're using a graphical form of PBS, we can use this to automatically generate an offer of coverage message as entered in the control information. That was what you just saw a minute ago. On the employee's check stub or direct deposit remittance, and that fulfills your obligation in that regard. This means your HR department doesn't have to send and track offer letters to a number of employees each month, which can obviously become burdensome. Okay, the employee code, this will usually be regular, but there are codes for exempt employees, such as owner, family members, shareholders, and seasonal workers. And we just talked about the groups. Here you can simply choose one or use the lookup. Let's just go with Group A. All right. Now Joel is a full-time employee, so let's put that in the first of these 4 rows. And Paul is simply going to make an entry in the box for January, press the F1 key, and it will complete all the remaining months. Of course, this can be done one at a time, and you can go back and edit specific months as necessary. These monthly offer of coverage codes are defined by the IRS for use on the 1095-C. And for example, 1H means no offer of coverage. So Paul, why don't we enter 1H for January and then 1B for every other month. Okay, some of these codes carry restrictions for the next array, so you'll see that we're not allowed to enter a dollar amount for January in the next row, which is employee contribution amount. We can enter an amount for February, and the F1 functionality works the same here. Okay. The final row is for IRS-defined codes explaining the coverage above. Paul, let's enter a code of 2C for February and beyond, or January, either way. And there you have it. That's the heart of the ACA maintenance software. Now we can cancel this and move on. Now we get to the maintenance reports. Let me point out that all our reports are available as a CSV, so you can have the added functionality there if you wish to customize anything in Excel. The ALE calculation we don't need to run. It's the fancy version of the monthly labor summary that we showed you earlier, which takes into account exempt employees. This simply determines whether you are subject to the ACA or can ignore it completely. The eligibility and insurance offer report, running that looks for the 2 check boxes in the employee ACA record and prints them out. This is a simple way to verify that you're in compliance, that anyone who's eligible has been offered, and it just gives you a quick snapshot. All right. The initial and standard measurement period reports are also known as the Lookback Method, and these will be very important if you have employees on that 30-hour-a-week cusp. This is the standard measurement period report. Employers are allowed to take a period of time to measure the work history and average those results to see which side of the threshold an employee falls on. Now, if you see someone has changed from part-time to full-time, you can make sure that you're in compliance by offering them the required coverage. You can also monitor and adjust scheduling before it's too late. This is a critical part of that management aspect. So we can see that Marie has been averaging 130.5 hours per month, and we may want to adjust her schedule up or down. All right, let's go to the Safe Harbor comparison report. And this one analyzes the 3 safe harbor methods all at once to help you choose the best one. You can see the 3 columns on the right will compare those annual levels of contribution amount. Okay, Paul, if we can run the insurance report, please, with the CSV. Okay, this shows you the breakdown of employee and employer contributions toward the insurance premiums. It will even help you settle on a required contribution percentage to keep coverage affordable for everyone and avoid those IRS penalties. And as you can see, you've got both the CSV and the PDF printouts here.
Excel spreadsheet.
Yeah. All right. And then we have the 1094 and 1095 reports. These use pre-printed forms that aren't relevant for an online demonstration, but we will pull the 1095C PDF back up again for another look now that you have a bit more background. And you'll see how lines 14, 15, and 16 mirror the entries in the employee ACA record. We can bring up the employee ACA record as well and compare those. So those are direct population for the 1095C. Okay, I'll just make a quick mention that all companies or aggregated ALE groups must file these forms electronically, which the software does. And there is also a plain paper or draft version, if you will, of the 1095C that employers can distribute to their employees to confirm that the information is correct. And you'll be able to run these before have to submit them to the IRS. Okay, in a moment we'll take questions, but first I want to thank John, Robin, and Paul. This webinar has been recorded for hours of future entertainment, so check out the PBS website for more resources, including the links that we have down at the bottom of this. And we'll also be producing future webinars with more specific content, and Robin will be able to get you signed up for those. So here's John.
Thanks, Adam. Great job. Paul, great job.
Thank you.
We've got a couple questions that have come in already. I'll read the questions and then we'll address them. The first question is, does the monthly report, I assume we're talking about the labor summary report, does the monthly report pick up special hours? If so, can we exclude it for employees that have field and that use that field for on-call pay rates, not hourly, it's an on-call pay rate. So I assume that we're talking about either physicians or some other type of service provider that is not necessarily on the job all the time, but is available if needed and therefore on call and does receive compensation for that. According to our understanding, though that pay is included, but what I don't know is how you would measure the hours. So I'm not sure I could answer this in detail.
Well,
are these, if these are salaried employees, then they're full-time anyway?
Yeah, that's correct. If they're salaried employees and they're full-time, it doesn't matter. That hours report is for the purposes of calculating whether you are an ALE or not, whether you are over 50 full-time employees. If someone's full-time, you don't have to know how many hours that they work, whether it's 30 hours a week or 70 hours a week. In fact, if you've classified them full-time and you're treating them as such, you've made your offers, it doesn't matter if they work 1 hour a week.
Or 100.
So
I'd like to re-emphasize that point. All the talk about, you know, counting your full-time employees and your, quotes, full-time equivalent employees is strictly for the purpose of determining you need to file or you don't need to file. You are considered an ALE or you are not considered an ALE. Once you've made that decision, then hours are no longer relevant. What is relevant, of course, is the status you assign to individual employees, and our brief review of this indicates that if they are being paid for being on call, that time is considered work time under the ACA.
So this could come into play if the employee is part-time, like if they normally work 20 hours a week or something and they're on call. Yes, if they're any paid hours, and that includes paid vacation, jury duty, anything like that. If sick time, all of those are to be counted in their hours of service. And if that averages out to be 130 hours a month, they are designated as full-time. Now, if somebody's already working that easily or they're full-time anyway, it's water under the bridge.
Okay. The second question that we have is, can you see all this with the DOS version as well? I think you're talking about our character interface, and yes, our character interface is available as well. The demonstration has been done with the graphical version, but Paul has just brought up and showed you what the screen looks like in the character version. So both the character interface and the graphical interface are supported in the product. We think the graphical interface looks better, it is easier to work with. That's why we used it for the presentation, but they're both available. If you have our thin client product, then even if you are on a Linux system, you still can see the graphical version, but that's totally up to you.
One thing I'll note here with the screen that's up, most of the screens will be 100% same order and everything. On this one, we have switch lines 9 and 10 for spacing purposes. You can see it for line 10, we had to list the 12 months on 2 lines. They just simply wouldn't fit in this version on 1 line. So here you get a slightly out of order. They correspond to 1095 form lines 14, 16, and then goes back to 15. In the graphical, it just goes in the same order, 14, 15, 16 as the 1095.
Okay. The next question here, does the measurement report pull all paid hours or only hours worked? For example, overtime and regular versus holiday, sick, vacation. Yes, it pulls all hours worked, including holiday, sick, and vacation, as we just discussed a moment ago. So everything is included under the ACA regulations. All these hours, types of hours are included. Do we have any more questions? Okay, here's one. What do I need to do about family coverage for my employees? Adam, you want to take that?
Sure. Okay, so the Affordable Care Act, if you have a full-time employee, it requires that you offer them affordable coverage for the employee only, and the dollar amount for minimum coverage is what's recorded. Now, in addition to that, you are also required to offer coverage to that employee's dependents, but not their spouse. However, that coverage does not need to meet any affordability standards. And in fact, an employee might also opt for a higher level of coverage than the basic amount. And as long as the basic amount meets the affordability standard, that's all that, you're within the law at that point. If they elect for a higher level of coverage that is more expensive and isn't considered affordable, it doesn't make any difference.
Okay, thank you. Got another question here. I noticed the long measurement periods Does that mean I can wait a year to offer insurance to new employees?
No, not necessarily. You do have those initial measurement periods set up within the software, and those are for people who you're unsure about, called variable hour employees, or maybe you just start them as part-time. But if they have a reasonable expectation of being full-time, then you are required to offer them insurance within that 3-month window. So, yeah, you're not allowed to just kind of push someone down into a part-time role when they're intended to be full-time.
Okay, thank you. Are there any more questions? If we don't have any more questions at this time, I will let you know that we will be happy to entertain your questions after this is over. You can email us and we will be happy to reply to you. And we will be putting a FAQ section out on our website so that you can go there and find out what other people are asking and see if you're interested. I would like to also let you know that, as I said at the beginning, we will begin shipping the Affordable Care Act software very shortly here. We will be making 2 installments. The first installment that we will ship to you is all the things you saw today, with the exception of the forms. We will be giving you all the programs that you need to begin building your data files, setting up and constructing the content that you'll need to report. We are still doing some final testing on the forms and the electronic media and on the consolidation of multiple different corporations or companies. So that will be coming out slightly later. The report that Adam showed you at the beginning, the monthly labor summary report, is included in the year-end payroll update, and the year-end payroll update is in final testing and will probably be released next week or right after Thanksgiving. So that's coming shortly, and hopefully with that you'll be able to more easily assess whether or not you need to report for the ACA. Robin has just told me we've got another question coming in. I'll give her a second to give me that. I wish I had a little song and dance I could do to keep you entertained in this pause, but I'm not exactly a song and dance man.
One thing I'd like to mention about the monthly labor summaries, as long as we have a few moments, is that if you have biweekly or weekly employees, it will automatically calculate based on their period when the amount that goes in a particular month. So it'll automatically calculate that for you in case you have a lot of biweekly or weekly employees. It will calculate it properly.
Okay, we've got some more questions here.
Yeah, the questions do keep coming in, but we're trying to relay them.
Okay. Here's a question. Even if a client is not filing their W-2s electronically now, they will be required to file these new forms electronically. The requirement to file your 1095s and 1094s electronically is, again, based upon the number of employees that you're filing for. If it's 250 or more, you are required to file electronically. And that 250 number would be the total of your whole company employees, and if you have other companies, if it's a multi-corporation environment under common ownership, it would be the total of all those companies that are under common ownership. If the total of all companies exceeds 250, then you need to file electronically. Now, the IRS instructions are encouraging people to file electronically, but it is not required unless you do have 250 or more employees. Here's another question. How can an employee who opts out of health insurance participation via a no benefits contract be reported as such in the software solution? There are codes, and I'll let Adam tell you about the codes.
Yeah, there are codes, and as long as you've offered, and you do have to record the amount of the offer and everything, if you've recorded those, that's what you report. So.
And we know, we have talked with folks where they have union, some employees are in unions, some are not. They have many different circumstances, but when you get into the details of that 1095 section that we've got on the screen right now that shows the various offer codes for the various months of the year, there are codes that you will use for employees who have rejected the insurance. Got another question here. Is there going to be anything in the future to help self-insured companies complete the bottom portion of the form? If there's a need for that, we would like to know about it. We have done some surveys and did not find that there were, in the survey we did, that there were folks who were self-insuring. We're kind of under the impression that there's not many companies, small companies, that self-insure anymore. If we're incorrect about that, we will definitely address that requirement. So if you have a need for self-insured filing, which includes the 1095B and the 1094B, as well as portions of the 1095 set, please email us and let us know and give us information so we can follow up with you and try to find out what your needs are. We will definitely look at enhancing the software to do that. Someone says I missed the first few minutes. I assume that this information is pulled directly from the payroll program and does not have to be re-entered, i.e. hours and wages are pulled from the payroll module. That's correct. In payroll, we pull information both from the employee file data, which is why Adam mentioned the housekeeping that you can start doing immediately to make sure that you have correct Social Security numbers and that you have a correct start date, and if the employee has been terminated, that you have the termination date in there. Those are all very important fields. In addition, we do pull data from the history file of the hours worked. So that's all brought into those labor summary reports.
We even include the adjustment history as well.
There you go.
And again, this has been recorded, so this will be available to view later on.
We have one comment. It just says, Adam and company, I applaud your efforts in this offering. This is one hell of an undertaking. Well, thank you for that. And you're right, Adam and company have been working very hard on this, and it has been one heck of an undertaking.
Well, thank you.
Any other questions?
Yeah, there's a couple here. Is the 1094B and C for every employee on staff need to be sent out? This is 1094B and C for just the IRS. Okay, the 1094B is provided by insurance companies, or if you are self-insured, you would provide that. As we are not dealing with self-insured companies at this time, we won't do that. If you're not self-insured, then your insurance company will provide the 1094B. You do not need to worry about that.
I have another question here. Will the magnetic media output be similar to the W-2 report, magnetic media, fixed length? Well, the electronic filing for the Affordable Care Act is a whole new technology that they have introduced. It's going to be, the e-file will be done via XML, which stands for Extensible Markup Language. So it's nothing like the old fixed format files that we've used for the W-2s for a long time. So there is no similarity to other electronic filing. The way this will work if you are e-filing is just like you go to an IRS site and register so that you can do your payroll tax submissions, you will register to file for the Affordable Care Act, and then when you are ready to file your electronic file, you will go to that website, you will log into it using your registration number, and then you will browse to the file that contains all this e-filing data, XML data, and you will select that, and it will be uploaded to the IRS site. So it's a different methodology, and that's the way it's going. We kind of anticipate that in the future, the W-2 magnetic filing will probably go the same way. So I hope that answers that question.
I've got one here. It says, what happens if you have 52 employees for 4 months of the year and 48 for the remainder of the year? Do you have to file? First, let me say, when you're doing these ALE calculation reports, this is for filing for the following year. So if this data was for 2014, that would determine your 2015 filing status. In this example, that average is going to be below 50. It had 52 employees for 4 months and 48 for the 8 months. So yeah, that'll be just under 50, and you would not be considered an ALE for the following year. All right.
But again, we are not lawyers or CPAs, so again, that's definitely something to review with your accountant or your attorney, whoever gives you professional advice on this matter.
When you say, also going back to that, it talks about the 52 employees for 4 months. There are seasonal employees. Now this is, again, this is a little bit more complex than we can just go into right here, but basically if you have employees who you hire and bring on for certain regular times of the year and they're not with the company longer than 120 days, those can be termed seasonal employees, and those would be exempt. Now, in that first, that monthly labor summary that we showed you, this does not account for those hours. It counts, it pools all of those hours and, you know, and factors those in as FTEs. But our actual ACA software, you would put a code for seasonal in the employee record, and it will not include those exempt employees. So
I think Paul is bringing up the record right now.
So if you want to edit, and you can see the employee code right now is regular, but if you were to call them a seasonal employee, if they fit that definition, then their hours would not apply towards becoming an ALE.
In addition, there are exempt employees. Exempt employees include owners, family members of the ownership, and shareholders. So those individuals are not required to be counted when you try to determine your status as an ALE.
Okay, here's another one. Will the software go back and generate reports for 2015? The answer is yes. If you have hours data, if you've been using Passport Payroll, you can create records for those, employee ACA records. The screen that's Paul's showing right now, you can create those for 2015. We could go back and create them for 2014 if we had hours data in this test system. So yes, you can go back and figure these things out for last year.
Any other questions?
There was a question about temporary employees. That is a very difficult question to ask. We can't really get into that. That's its own webinar right there. So I don't know if we have, do we have any other questions. We probably have more here. We'll just read through them. Do you have any over there?
Nope.
The questions do seem to be winding down at this point.
Okay, I have one comment from someone who says, thank you for making our work easier. It will still be a massive undertaking for payroll, but this will make life much less complicated. Well, that's our objective, and in truth, the ACA is a very complicated law. The IRS instructions are fairly involved and complicated also, and we're definitely trying to do everything we can to simplify what it takes you to administer and comply with this. And as I said at the beginning, you know, our partners are the fabulous eyes and ears that tell us what you need, but I encourage all of you, if you find additional things that would be helpful to you in complying with this, including things like the dependent coverage, if you have a requirement to self-insure, please email us and let us know.
There's a couple for you, and I have one here that I can probably answer.
I have a question here that says, so for somebody who is starting to use this program, are they going to assess the 2014 employees first? That would probably be the way you would determine whether you are required to file for 2015.
Right, and you might not, you don't have to enter 2014 data if you have 200 full-time employees. You know you're an applicable large employer. You don't need to enter all of 2014 hours to determine that. So it's, you know, if you're in that little gray area, if you're between, you know, if you can say, oh, I'm between 40 and 60 or 70, or if you have a bunch of part-time employees, maybe you only have 10 full-time, but you have 100 part-time, now you may want to do that, you know, enter that data for the last year and determine whether you're an ALE.
Run the report on it.
Right, run the report, sorry.
As long as you used our payroll package during 2014, all that data, all those hours data is available to run the report.
Yeah, the monthly labor summary will give you that information.
Ah, yeah. I mistook that. I thought they were saying if they were just new to Passport, but no, if they have the hours, yeah, then they can run that other one already. Okay, John, there's a couple you might want to take a look at if you think this is appropriate.
What is the installation procedure? We are writing install programs that will work very similar to our current install programs. There will be a slight difference in terms of the licensing process, but we're working that out right now, and we'll let you know about that in the very near future. We are licensing this software for use by individual companies. So we will be incorporating your EIN into that license agreement. See, I also have, will you provide XDBC access to the new ACA tables to facilitate import of data for initial table build? Yes, after we release this initial 3 products that are fully integrated with Passport's payroll solution, we will be publishing a standalone version. The standalone version will include the employee file from our payroll and the hours history file from our payroll package, and we will be providing methods to import data from other sources, including ODBC, using ODBC to pull data and then bring it in to construct the employee information and the hours history information. So the standalone version will not be able to run payroll, but it will have components of our payroll system that are used by the Affordable Care Act management software. Does the ACA system pull the insurance contribution into the ACA reporting module, or must the contribution be entered separately into the ACA module? The answer is no, we do not pull the insurance contribution from anywhere other than from the ACA control file and the ACA group file records. So let us show you that. So this is the ACA group file. You're allowed to define groups, and for each group, you have the potential here to put the premium contribution that is, quotes, affordable by the employee into the group file. And when you then generate the ACA records for the employees, it will populate that amount. Now, if you don't put it in the group record, we will pull it from the ACA control file. It's also stored there. So you should not have to manually enter it. There are some things that we'll get into in future sessions about when your insurance plan renews. There is a field on the 1095-C that identifies the month in which your insurance plan renews. And the reason for that is because frequently that means there's going to be an increase in your insurance premiums and also potentially a reevaluation of the employee contribution to the premium. So that's something we're going to get into more detail in a future seminar on, but no, you will not have to manually enter that information on an employee-by-employee basis. Is the information already in payroll going to populate the ACA screens? And that's another question, but it's kind of along the same lines, and the answer is yes. We have a program that you can use to automate the generation of the ACA records for all your employees. And there is a separate ACA record, as you can see up at the top of this screen, where it says payroll year. There's a separate ACA record for each employee for each year. The IRS guidelines want you to keep 3 years worth of history. So we made the year part of the organization of this data so that you can in fact have multiple years worth of data that you have saved in the system in case you need it in the future to communicate with the IRS about what you did, why you did it, etc. So yes, we are using the employee data, and we are providing a method whereby you will be able to keep multiple years worth of data.
So I'll just expand on it just a little bit. So in the screen that you can see, most of this information will be common to many of your employees. However, that default coverage code for full-time employees and then the coverage safe harbor code, those can vary a bit because in that first one, the 1 series codes, the codes 1B through 1E detail the level of coverage. So it will be different for someone who is a single employee versus someone who has coverage for their dependents and themselves, and then there's another code for coverage for their spouse, their dependents, and themselves. So you will have to do a little maintenance with that code. A lot of the other stuff will be done for you.
Okay, we've got another question, Adam. Will the hours be calculated on pay period or check date, or can we choose?
It will be pay period, not check date.
Okay, for allocating hours to months?
Yes.
Okay. What about employees terminated and rehired in the same year?
Well, we don't exactly have enough, that doesn't really give us the enough information to go on. There's a situation where if an employee is hired and they're terminated for longer for a longer period of time than their last interval of employment, they can be considered a new hire, and basically the clock starts all over. Otherwise, you basically, you're still going to calculate them like you would a normal employee.
Okay. Is the information, we answered that, okay. I've got another one here. If you are a multi-company employer and have separate payrolls for each company, will they be consolidated in the ACA module? The answer is yes, and it is yes to two different scenarios. We have learned that some folks have, in fact, set up multiple companies for different business locations, but they're all under one corporation. They are all under one single EIN, Employer Identification Number. And because we learned that, we have, in fact, provided a way to consolidate the information for multiple passport companies, multiple companies in PBS, but whose jurisdiction file has the same EIN number, so because they're all part of the same corporation. Now, the rules of the Affordable Care Act and the IRS are that you can only file one 1095-C per employee. So we have a consolidation tool that will allow you to see, based upon the same Social Security number, any employees who are working and being paid out of more than one PBS company, but are part of the same EIN, the same corporation. And we have built in the ability for you to identify which company you want to print an 1095-C from for that employee, and then it will not allow you to print, and it will not count in the totals for the 1094 that same employee in the other companies that he is paid out of. That's scenario number one. Scenario number two is where you have multiple different companies, and they are, in fact, separate corporations with different EIN numbers. If they are owned by common ownership, then they are required to be consolidated, and there are some fairly complex things that you have to do in reporting for those employees out of these different corporations. We are handling all of the requirements as we understand it for reporting multiple employees who work, for reporting on employees who work for multiple different corporations and are paid by multiple different corporations during the year. And again, we will go into the specifics of that type of consolidation in a future seminar. So at this point, I think we're about done. There's one last question here. The default group ID, can you assign the group ID to employees in payroll, or can you only assign them in the ACA software after that information is built? Can you specify employees to specific groups during the information build?
No, right now you need to create a group first and then assign an employee to a group. If you want to, let me see if I may.
When we generate the employee ACA record, as we mentioned a few minutes ago, we look to the group record that you have specified when you generate the records, and we pull whatever group code into the employee record at that time. But we can only do that for one group. So if you have multiple groups, we would suggest that you generate the biggest one first, and then you'll have to go in and change the other one. We do not have an ACA group field that you can maintain on the employee record in payroll. at this time. If that's something that everybody wants and needs, let us know and we'll put it down for the future. Well, our time is up, and I want to thank you all very much for joining us today, for all the great questions, and we look forward to hearing feedback from you on not only what we can do to make your lives easier, but what future webinars you'd like us to provide. Thank you again very, very much, and we'll sign off at this time.